Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Wednesday, February 9th, 2022. Markets marched higher to that gap fill, which I talked about yesterday. No surprise for me here. Again, if we zoom out, this was the gap fill right here. It was right around 457 or so. We closed just a shade above it on the day, just again a hair above that gap fill. So markets again have filled one of the key gaps. Remember what I always tell you guys, gaps are made to be filled. Doesn't mean they're going to get filled right away, but ultimately they get filled. I mean, if you look at charts in general, it's very rare you will find a gap that was never filled on a particular stock or market. All right, so again, that's where we are right now. Markets, again, beautiful little move. We are seeing a little bit of a minor uptick, about 30 cents after hours here. I saw Twilio was up sizably on the back of earnings there. I did see Disney as well having a big move as well. So take a look at Disney here. This is pretty impressive. DIS closing at 147, trading at 161 after hours. That's actually a pretty good move for Disney. All right, in fact, it's a very, very good move on Disney. So nice move there on Disney, guys. And again, today just another spectacular day in terms of profits. Today selling Viacom for over 10%, SE 12.5%, and TNA 13.85%. So just racking up the wins on for verified investing for our accounts. And again, it has been one of the best, if not the best, January that I have ever had in terms of trading. And I would love to say that I've discovered something new. Listen, I mean, we've always had good Januaries, right? We generally have good years. But it's not, it's about what the market gives us. And I think we have to be humble enough to understand that. And especially me, I'm not going to sit here and tell you that I have anything that special. I know the methodology. I've been around the block. I know how to look for chart setups. But the volatility of the market is absolutely spectacular. Interestingly enough, guys, and we'll go back to the S&P in a second, but I believe AFRM just reported earnings. That stock is up after the bell as well. Maybe not actually. It looks like it's up about $1 after hours. It had a monster rally during trading here, and then we also have seen again, as I said, Twilio. Take a look at Twilio, folks. Twilio closing at 202.19, now trading at 256 in the after hours. So my hope here is that this pushes the markets up more. I believe it will. The reason why that's a positive is that we want to get to a point where we short the market. That's what I'm looking to do. All right, now I'm waiting for the market to give me the signal, which will be at a technical level. But again, that's the angle now. There is no way this market's going back to all-time highs, in my opinion, and I do think that we are setting up for another beautiful trade to the downside on the markets, okay? Looking at the S&P chart here, or the SPY intraday again, if we zoom out, I think that this might be your next kind of short-term target that maybe we can fill, which is this gap fill right here. So again, you can see the gap right here. It looks like it was from the 14th to the 18th. So again, that was, basically, I think that was one of the days we had a 3-day weekend. So the markets closed on I think it was a Thursday, and on Tuesday we opened down here and then had this big sell-off. So going and filling that gap right there would be a key, and that's right around 464.5, 465. So again, that's what I would look for in terms of potential remaining upside. Now, what's important about this is that if we get to that level, I want to show you this other chart here. So we're going to flip over to the daily chart. If we go to the daily chart, if we get back to 464, 465, look at where that is, right? And this is where charts are just mind-blowingly awesome, to me at least. And again, if you look at that level, look at it right here. Where is 464 to 465? And if you look again, where is it? It's right into that retrace to a scene of the crime, all right? Now, will I possibly short a little ahead of that, start a position? Yes. I like doing that because, as we all know, levels sometimes miss by a hair. They could miss by $1 on the spiders. That wouldn't be abnormal. Maybe my line isn't drawn precisely 100% perfectly. So there's like slippage in that regard, which is why, would I potentially start a position at like 460 or 462? Yeah, I would. And then again, it's always starting a position, which is the smart thing to do. So if it goes a little higher, we have that ability to add, right? But again, so cool to think about that, where you could potentially move up to that level. Classic retrace to the scene of the crime. Pull the trigger on some shorts by buying some SDS, maybe SPXUs. There's some different ETFs that we could potentially jump into that will give us great S&P short exposure. Okay. Again, the rally today was awesome in that a lot of the tech stocks rallied today. I'm sure you guys all saw it, but Facebook ripped higher today. I thought this was a no-brainer. The level on Facebook is just so cool, folks. Again, if you're like me and appreciate the charts, I mean, look at this. Look at that pivot to that pivot right to there. That was at 220 basically. And then look at Facebook rip up today, closing around 232. In the after hours, it's trading near 233. I do think it has more upside. I think 240 is at least a no-brainer, maybe even 245. Once it gets to 245, I think that's where it's going to start to have a little bit of resistance, just based on the fact that that's gap window. Doesn't mean it can't trade above there, but that definitely is going to be some big resistance in that range. PayPal also had a little bit of a bounce today. That was good to see. One of the stocks that performed best today, you guys saw it here, Square. We do have Square in our portfolio still, and I'm still riding it because today was really arguably the first big bounce day it's had. I mean, it had a bounce over here, right? So big bounce here, but look at today's move today, closing near 113. So we're up basically over 10% on this position already. Again, we're in the money on Facebook, still out of the money a little on PayPal. Exxon was down today, so I mean, this is the best of all worlds, right? When you have, your shorts are working and your longs are working as well. So Exxon in the money there, IBB doing well, KWEB, the Chinese stocks just had another phenomenal day. Take a look at KWEB, $38.46 from our average entry there of $33.90. So again, up over $4 on that, well over 10% as well. And what you're going to see me do, folks, is as we get more and more in the money on these, as we get closer to levels to short, I'm going to pare back more of these long positions, right? And that's really how I trade. That's how I intend to trade, and I'm going to continue to do so in terms of just maneuvering and slowly taking off shorts as we get, slowly taking off longs as we get closer to resistance and ultimately starting to look for that downside move in the markets, all right? And again, tomorrow, by the way, is the CPI number. So again, Consumer Price Index, CPI, that is a major inflationary number that we're going to get. So be ready for some volatility around 8:30 in the morning, okay? All right, so let me take a look at a couple other things here, just kind of scanning through. Teladoc had a nice day today. Awesome move on Teladoc. Also, great move on Zoom today. Twitter was up beautifully on the day as well. So again, nice to see these stocks really doing well. Twitter reports earnings, I believe, tomorrow after the bell, but let me just double check here. Again, I don't think it's extended enough to sell at this point, but if it were to go up more, then I would consider it. Actually, Twitter's tomorrow morning. So tomorrow morning is Twitter, and I apologize for being wrong initially there. But again, I still plan on holding that. If you look at this chart, this is mostly bullish consolidation starting to uptick. So I think Twitter has upside maybe to the 40, 41 level. Wouldn't shock me to see that. Now, with earnings, there's always a risk that it drops 10 or 15%. I mean, heck, in the way of Facebook, maybe it'll drop even more, maybe 25%. But the beautiful thing about it is we've taken so many profits and we are in the money on so many things that's okay. You know what? When you have a measured position where, I, for instance, I only have 1.5% of my portfolio in Twitter, it's not that big of a deal. Like, yeah, it'd be awesome to make money on it. Would kind of suck to lose. But at the same time, if you're following your investment strategy, if you're diversifying, then it's all in all fine and dandy. And that's the beauty of it. All right. So again, we'll see how that goes. Again, as I mentioned, Chinese stocks, Alibaba up 4%, Baidu up about 2.5%, TME up 6.5%, even GOTU was up 11% on the day. So really good to see that. IQ up 13%. Awesome moves on the Chinese stocks today as they continue to rally higher. All right, so let's go to a couple other charts here. Let's flip back to the spiders. We talked about this one, how, your upside, you have a gap fill. So the gap fill that I showed you on the intraday chart, I want to show it to you here. This is where it is. Check that. Where was that? Now I'm having trouble finding it, but yeah, all right, we'll have to look. But obviously, this is the big gap fill. Yeah, this is it right here. Sorry, took me a second there. I was having a little bit of a brain freeze. But you can see this is that gap fill right here. And notice again what's right there. So this would be epically big resistance. If we could get here on the spiders, this would probably be one of the best shorts we could initiate in this range. All right, just a dual factor trade. We know dual factor trades are always the best in terms of setups. Taking a look at the QQQ, Q's having a beautiful move here today, trading up about 2.12% by the close. We aren't quite at the gap fill from basically last week, and this was that big down day we saw, or the gap where we had the next big down day. And this gap fill is right at 368. So again, we're only about $1.30 away from that level. I do think that gets filled tomorrow. And then the question is can we take out this high? If we take out this high, can technology stocks make it all the way back to this level? Now, this would be kind of a long shot in my opinion. I don't think I would wait to short because I feel like I might miss the trade in that respect because there's actually some other big levels here. But I would say right for me, I would start shorting the Qs right here, right? So you have a major pivot here. You have another major pivot just a hair above it. But right just in the 377 to 378 range, that would be absolutely where I would start to accumulate some shorts on the market, or on the Qs, I should say specifically. Because remember, the Qs charts in the S&P, they're a little different, right? The levels are different, although interestingly enough, a lot of times you'll see the levels hit at the same time. Just as the Qs level hit, it happens to be hitting on the S&P and vice versa. Okay, so we'll continue to follow that and see how it plays. Again, you guys did see I took my TNA profit off the table today. Not to say that we can't see a little bit more upside in the Russell, the IWM, but as you guys know, we are inching into this little bit of a level, and I felt it was prudent to pull back just a little bit. We had still we still have a fair amount of long positions out there, but again, notice how close we're getting now on the IWM, right? So the IWM 208 right in here, that is your big resistance level, and we're very close. We're less than $2 away at this point, so it doesn't really make sense for me to, you're holding into a CPI number tomorrow that could be very risky to the markets. It doesn't make sense to keep all the longs still out there. Pare back, and this is, again, how as a fund manager, you need to be thinking, right? The small investor thinks about always hitting home runs, going all in. Someone who wants to build real wealth thinks about it like, okay, well, where's my risk? All right, now that we've moved up, there's more risk, less reward because we're closer to resistance. So you take a little off, you pare back a little bit, and that's the way to really manage a portfolio. All right, that's the right way. Okay, so again, we'll continue to follow all of these charts and see. Let's flip over to good old Bitcoin here, which hasn't, in all fairness, done a whole lot since yesterday. It's kind of just inching within that range. You can see yesterday we had a high around 45,600, a low around 42.7, and now we're kind of just in the upper ranges here. One of the interesting things I'm monitoring is, so number one, we know that we have this trend line on Bitcoin, right? So we have this trend line here, which is where exactly the high was. And then we also have this little pivot high right here, which we still haven't confirmed above as well. So again, lots of resistance here. You even have this level right here, which we've talked about, right? Lots and lots of resistance. Now, I'm going to be straight with you guys in that there is always a chance that Bitcoin can break above this level, all right? Just like any chart can do anything, right? It's all about odds and probabilities. The question is, what do we do here? If we were to consolidate and go sideways, I would start to favor a move up to about 52,000 up here, which would be the midpoint of this up, top, and bottom range, and also this little pivot area right here, right? But again, that's all dependent on how the charts form. We want to watch. We want to be open. Too many people out there are locked into one directional move, whether they're hodlers of Bitcoin and they think, oh, I just think it's going straight to 1 million, so I'm just going to hold. Or in other cases, you could be the opposite way on something. But it's better to be a trader or have the mentality of a trader and understand that moves will be adjusted based on what the price action is showing you, or that's what you have to expect based on what the price action is showing you. All right? So again, just keep that in mind. I think that's super interesting. Again, right now, respect the resistance, 46 to 45,000, still big resistance on Bitcoin. But again, be open to the fact that if you make a bull flag, then you could go to 52. Overall, do I still think deleveraging is going to occur? And by the way, there's probably not a ton of leverage of like it used to be in crypto, right? So, you used to have a lot of 100 to 1 margin, just ridiculous margin that's absolutely asinine. That's probably not in Bitcoin because it all was wiped out in the drop that we saw. Having said that, when I say deleveraging, I'm not talking about Bitcoin specifically. Bitcoin is an ancillary play off of deleveraging in the system. When I talk about deleveraging, I'm talking about the housing market being a bubble and starting to come in. Even if it doesn't collapse, 20% downside is enough deleveraging in that. I'm talking about the Federal Reserve deleveraging by making monetary policy tighter and more hawkish. I'm talking about deleveraging in the stock market from some of these ridiculous valuations that we've already seen come in decently, but probably still have a lot more to go. And that ultimately will affect Bitcoin and cryptocurrencies. There's no doubt about it. So ultimately, I'm still in that camp where I see that happening to a more so extent. I don't believe that the S&P is done selling off at this point after coming down, especially after breaking that sharp uptrend. And again, don't forget that on the S&P 500, if we flip back to that on the SPY, you have to remember that this was your long-term trend, which is still a great uptrend, right? But this was your trend on steroids when the Fed came in with extra policy during COVID. So again, it makes sense to me that you'll likely come back probably at some point this year to test this upsloping trend line and eventually probably coming inside of this range. Now, if we get a recession, if the Fed triggers a recession, then I think we trade below it. But again, if you just go back to kind of the 1% to 2% growth on GDP that we were having, my guess is we come back to this range here. That's assuming the Fed continues to kind of, tighten policy a little bit throughout 2022. Okay? All right, so that's that. Let's quickly go to a couple other charts. We got to take a look at gold, as I always love to do. Gold continues to march up. I showed you a really cool 1970s chart comparing it, or 1975 to 1980, kind of comparing it to the current price action. Gold up again today. It is marching towards this level. I don't think it gets through on the first hit, but my guess what it's going to do, and this is just speculation on my part. Let me erase those lines. Is you probably touch this line, you have a small check back like this, and then you break out. All right, and if you remember, that's kind of what Bitcoin did, just in a different setup, right? So if we go back to the Bitcoin chart, it's, and this is very common. This is very similar, right? So Bitcoin had all these kind of green candles marching up into a level. Very hard for it to just push through when it's so, when it's so extended like that in the short term. So what did it do? It pulled back a little and then broke out. So the same thing applies to gold, where you have to look at it reasonably and understand what, how price action works and what the probabilities are. And when you get when you get this vertical move up, it's hard for it to get through on that first hit. So it usually pulls back, gathers itself, then pops through. Either way, I'm still in the camp that gold has it's the beginning of a major breakout in gold once we get above this line. And then ultimately, before it's a real major breakout, you're going to have to take out 2075, right? You're still going to have to take that out. Okay? All right, so let's continue to follow that over the next couple days. Let's look at silver real quick. Not a whole lot different on silver here. Sideways chop continues. A little bit of upside in the near term here. But again, just continue to watch support around 2175, 2150. As long as that holds, again, I think you favor a neutral to upside bias. Even if it breaks that level, I still don't think there's a ton of downside, as I've said. I think you're going back to maybe 19-ish or so, and then again you got to buy like crazy at 19 if we get that chance, right? There's no guarantees. If we get that chance, that's the spot to buy. Looking on crude oil today, so crude oil did see a little bit of a bounce today, so not too shabby. We're back above $90 per barrel. Again, still very bullish sentiment out there on oil, still money flowing in, although as I mentioned, Exxon was down today, which in a very strong market was interesting to see. Chevron was actually up, but not up a ton. But again, to me, I've shown you the trend lines on this, folks. I mean, I think that speaks for itself. Just using this one trend line alone tells us we should have some sort of pullback here. And again, beautiful little trend line right there. So again, small pullback has started. If it inches back up a little bit, the key is I doubt it takes out this line, and then ultimately we see downside. Now, the one caveat to that would be if Russia does invade Ukraine, could it cause a short-term spike up in oil? Yes, it could. I mean, you have to be ready for that. You have to take that into your risk assessment when you're allocating funds to your oil trade. But again, my guess is it would be somewhat on the shorter side, and I would probably short oil more into that. If that did pop oil, probably look to short it in that respect. Okay? All right, guys, that's really all I have for you today. As always, it is a pleasure to bring you guys more profits. I feel like it's almost a daily occurrence. Please don't get too stuck on that. I want to stress that the market at some point will get quiet, and we will have, a couple weeks where there's no profits and we're kind of just sitting back and just waiting. That's part of being an investor, If you're someone who expects constant profits like I've been able to generate from January into February, you're going to be disappointed at some point, right? It's not to say we're going to have a bunch of losers, but there's just going to be quieter periods in the market. I've done this since, God knows how long, 20 plus years. I've run in the money stocks since 2007. And yeah, there's been periods where it has gotten very quiet, and it will again. So I just want to throw that out there because I think that, sometimes newer members get a little bit on the spoiled side thinking like, oh, this is easy. This is how it is. And, they just expect nonstop profits. And in reality, it's likely not going to be like that all year round. Now, do I think increased volatility is here for a general longer time? Yeah, but you're still going to have quiet periods in between, as we know, probably around holidays, potentially, stuff like that. All right. Have a good one, guys. Let's see what the market does tomorrow. Thank you, as always, for being members. Take care.